Good afternoon. Private schooling group Kuro reported an increase by almost a third of interim profit. And of course, this company did mention that average learner numbers increased by nearly 6.6% to just over 70,000. It's the annual increase in fees that helped tuition fees go up by 13.3%. I spoke to the CEO, Andries Greyling, for more, and especially about the 6 months that was for the company. So listen to that.
It's amazing to have the first full year of activity again happening at our schools. So you can imagine for 2-3 years our learners started the academic year, and then they had to stop with sport, and then it's on off, back in the classroom, back at home. So this is an amazing 6 months just to see learners being active again, participating in sport and cultural activities. And to see the energy levels back at our schools. It's a building, it's just a building. The energy is happening via our staff and our learners. So we had brilliant results the first 6 months coming from our learners, and we're super proud of the achievements for the first 6 months.
Let's, before we get into the actual numbers, let's talk about that increase in learners that you're seeing. Is it because we're returning to a new sort of sense of a normal, or are there other factors that are driving that increase in learners?
Over the last 10 years, we're down about 80 campuses all over Southern Africa. So as we are starting to grow and filling it up, you obviously will capture more and more learners. So what we've seen over the last few years is a demand in our grade 8 learner intake. So we're really proud of that learners growing year on year. And as that learners then go into grade 12, you will have a normal rollover. So that's one part of our growth, is starting to fill up our campuses. And then big demand for our high school product, which we over the years we changed into a more hybrid offering for our learners, where they just don't have to have a subject face-to-face with the teacher, but also if they want to choose a subject that's not offered at a school, they're more than welcome to do it via our electronic platform. And it seems to be the learners are loving it, and it seems to be hitting the market correctly.
So you saw an increase in headline earnings and recurring headline earnings, that is. What's driving that increase? And perhaps you can give us a more clearer picture of what the financial performance of the company looks like.
Overall, we are a business that's generating annuity income. So if we able to keep a learner or get a learner in grade 1, and you deliver quality and the parents can keep on affording you, you will hopefully keep a learner within your system for anything between 12 and 18 years. So that annuity income, with your base being there year on year, is contributing towards us generating quite nice cash flows. But also for us as a group, we've been focusing a lot on what's under our control, what we can control. Things like the discounts we offer. So that's been driven down over the last few years. That's obviously opening your margin. Over the last few years, we absorbed massive increases from the city of Joburg regarding rates and taxes. So that's been absorbed the last 3 years. Luckily to say this year, only increase on average about 5% on those expenses. And then obviously your profitability has been driven by your learner number growth. So we've got a big fixed cost base in our business, which is our salary and our facility costs. So you can imagine if you start filling up the classes, your profitability will increase. And I think we're starting to see those benefits coming through.
It's quite a complex economic environment. What's your sense of the financial state of the parents whose learners are enrolled at your Kuro facilities? What does that picture look like?
It's actually, you can imagine as leaders these days, you just came out of a pandemic and then you need to manage into a recession. And I think the consumers, they are under pressure. And you can see, that parents, they need to count their money, and then you as a supplier need to make sure that you offer quality. So we've seen more leavers this year due to bad debts or parents that just can't afford you. So it is higher than normal, but I think what we also seen is the willingness of parents to pay for education, which they know, for them to allow their children to pass grade 12 to get into university. Sadly, they need to pay, or they need to pay for academic quality, and they are still adhering to their obligation to pay.
In terms of investment and expansion projects, are you anticipating more in the next probably 6 months or so? What does that picture look like?
This year, we said to the market, we're spending about 1.1 billion in capital, of which most of that goes into expansion of our current campuses, meaning when you construct your first schools, the first phase of your school, you normally will just do a few classrooms. So as you fill up capacity, you need to do the next phases of classrooms. So the bulk of our capital goes into that expansion at our current schools. And we acquired Herringbridge within this year, and some building for one or two of our schools, Foreshore, for example, and then some more land at some of our other campuses. So our capital investment predominantly goes into expansion. Our maintenance capital is not that high, and you can imagine our schools are still young, so we don't have to, luckily at this stage, spend a hell of a lot on maintenance.
Going into the next half, what will you and the team be focusing on?
Learner numbers are stabilizing. Your bad debts, even though it's higher than pre-COVID levels, it's starting to plateau when we can start managing a figure that that's been absorbed into our financials the last 2 years. So the big focus for us is to make sure that every single one of our schools deliver on quality. That includes academic, cultural activities, sport activities. You can imagine it's when parents will enroll with you when they see those qualities happening at their school. So there's a big focus on that. Obviously, the rest of the year, creating the capacity for intake for 2023. And then obviously a big focus on the intake for next year, and make sure your grade 1s and grade 8 learners we capture again starting of 2023. And then always, the end of November is our exam time for our grade 12 learners. Got about 3,500 learners that's going to write our grade 12 exams, and we are looking forward to their results. Year on year, they really generate good results. So I think growth in those results and quality there is non-negotiable for us. So yeah, it's filling up our campuses and make sure that we deliver on quality.
That was Andries Krelen, who is the CEO of the Kura Group, talking to us about the 6 months that was for the private schooling group. Well, moving on to the markets, Asian markets were lower across the board, and this is after the latest Wall Street rally that we saw cooled overnight. We also had the FOMC minutes for July showing that Fed officials saw little evidence that inflation was cooling at the time of the event. Rather, at the time of the meeting, Fed officials also highlighting the need to eventually dial back the rate of increases, as well as indicating that they are concerned about over tightening, which could hurt the economy. So some people have interpreted the minutes as slightly hawkish, and what is helping the interpretation was the repeat of the line, and I quote, it likely would become appropriate at some point to slow the pace of policy rate increases. But to talk to us about those FOMC minutes and also some other aspects taking place in the markets, we are joined by Thato Mashego, who is from Sanlam Private Wealth. Thato, thank you so much for your time. Let's get into the JSE performance. I mean, you're looking at lower Asian markets, you're looking at the European picture. How are we holding up, given the fact that we've also had those FOMC minutes last night?
Good afternoon, Anastasia. It has been somewhat of a tepid start to the day. Yesterday, markets generally ended a bit weaker, with interpretation of the minutes, as you stated, being somewhat hawkish. And this was in addition to the very weak CPI data out of the UK at 10.1%, as well as just a general concern with the outlook. Target, for instance, the US retailer missed on its on its top line expectations of, I think, about 3.5%. They came in about 2.5% for the quarter, and they signaled that the environment is going to be quite challenging going forward. So yesterday, with all of that data taken into account, it was quite a bit of a downturn towards the end of the day. We saw somewhat of an uptick today and a bit of a different interpretation. And as you said, some people have interpreted the minutes as being slightly more bullish. And we can see that playing out with the Fed funds futures rates, pricing in about a 70% probability of a 50 bip hike at the next meeting in September relative to a 30% probability of a 75 basis points hike. So no real consensus as of yet in terms of whether we're going to see, definitely there will be further tightening, but the debate at the moment is, are we going to see a series of 50 bip hikes going forward, or will there be another 75 bip hike in September and then some further moderation after that? Of course, the Fed's still targeting their 2% inflation target via the PCE deflator, probably towards the end of next year. And the question is, what is the best way for them to get there, and what implication does that have for the economy?
A little bit earlier on, we had that interview with Andries Krelen, the CEO of Curro. What did you make of Curro's financials?
Well, their revenue, as you mentioned, up 15%, so now at 2 billion rands for the period. And there was some pretty decent margin expansion. I believe the net margin in the past period was about 6.5%, this time coming in at about 7.3%. And that had to do partly with the rise in tuitions, which you mentioned, of about 13% over the period, as well as reduced discounts. So I think fewer learners are getting discounted fees, somewhere around 7 or 8% versus 9 to 10% previously. So Curro is doing quite a bit to, I suppose, improve on cost controls and on margins. And obviously there was an issue with non-performing loans. And I think during the period they sold off part of their debtors book, specifically students who've already left the business and who are no longer in one of their schools and are delinquent at this stage. So they've made some provisions for future bad debts, and net of provisions, the current book is about 225 million. Which should be manageable given their cash flow profile and the improving outlook. Obviously, the COVID period was very difficult for them, and a lot of parents would have struggled in terms of income. Some may have lost their jobs, and so this is one of the reasons we had a spike in bad debts. But obviously now things are somewhat back to normal over the past 6 to 12 months, and this should be positive for them going forward, as well as the expansion plans, which they mentioned, opening up new schools, ramping up capacity utilization, which will be very important in terms of improving profitability and getting out on that J curve.
We also had Tencent reporting its first revenue drop since the IPO in 2004. A key highlight for you as we have the last minute and a half of this discussion.
Well, it was somewhat better than the market expected. So at an earnings level, earnings were down 17% year on year versus consensus expectations of down 30%. So that was positive. The main shift is the tone and the messaging coming from the CEO, saying that going forward, Tencent will focus a lot more on delivering shareholder value. So they'll be cutting back on certain unprofitable units. They'll be reducing CapEx, having more focused R&D, and increasing dividend and looking at a more aggressive share buyback plan. As you know, Tencent also has a very large investment portfolio, about $150 billion, which they've invested across a variety of assets, and some of those may be unbundled or sold off rather. We've seen them selling their JD stake, and people are speculating that they may sell down their stake in Meituan. So all of these are suggesting that the period of rapid growth and expansion may be coming to an end, and going forward there'll be a lot more focus on cost control and delivering value to shareholders. And the underlying businesses did have a very poor quarter relative to the prior period. I mean, gaming was down 1% locally and globally. But obviously, as people normalize in terms of going back to their normal lives and not spending as much time playing games locked down at home, advertising revenue was quite bad as well. But that aside, going forward, things do look positive in terms of the outlook and obviously them changing their strategy a little bit.
Yeah. Tata, thank you so much for your time. Let's leave it there. That is Tata Mashego, who is from Sanlam Private Wealth, giving us his perspective on the markets. Of course, tomorrow we've got Standard Bank CEO joining us to talk about the company's earnings, and we'll have all of that for you. That is it from me. We're going to take a break and have more news for you, so stay tuned.